Good morning, everybody. Hey, welcome to Thursday, February 20th. It's hard to believe we are already two-thirds of the way through the month of February. This year is moving right along. Hey, we're getting ready to talk to Dave here in just a moment, but I want to share with you just a little bit. We've got some acquisitions going on today that have been announced. We've got some earnings. We've got some slash dividends. And we still have a few earnings straggling in to talk about. And so looking forward to that this morning as we progress through the week and as this week kind of winds down. Dave will be with us here in just a moment.
Tears for Fears there. Hi. Glad you're here today. It's 8:40, 20 before 9. Check in on what's happening on Wall Street this morning. Boy, we got a slew of headlines today, some of them really interesting. Let's head downtown to the offices of Statler Financial Services. Phillip Statler standing by this morning, starting out with a macro, Phillip. We actually are staying low on the unemployment, 210,000 first-time claims this morning. I was saying earlier, there really isn't a reason why the economy should continue to go at the pace it's going, but two new records yesterday on the indexes in the intraday numbers anyway. Low unemployment, the world's coming up roses on us all of a sudden, isn't it?
You know, you're right, Dave. It still is looking that way as we still seem to be making progress as we move forward. I mean, who knows where we'll end up in all this, but it does keep moving forward, and we got to like what we see so far, even though we got a tinge of red this morning.
Yeah, a little bit of red on the futures this morning, but I'm almost getting used to the notion of what goes up must go down because it bounces right back again. It's kind of strange. You and I have been saying, and we always sound like stinking thinking on this, and my boss always gives me guff when we do this. We're overdue for a correction. We're overdue for a recession of some sort, and we're hoping for a soft landing when that inevitable recession comes. But there's no indication of it out there at the moment. Everything seems to be coming up roses, and it's almost scary as it continues, isn't it?
Well, you're right, but I did see a couple headlines that I think should give people at least a little concern. When Goldman Sachs comes out and says that they believe the coronavirus will eventually throw us into a projected correction, meaning we should see a drop of 10% or more. And they're saying, and their opinion evidently is that they feel like that's probably coming.
And
Just you don't know when.
yeah, and a 10% correction. With all the herky jerky moves we've gone through, the conventional wisdom is we're supposed to have at least 10% correction a year just to, kind of flush the industries out that have overachievers. If that were all we got out of it, I don't think you and I would have much to complain about, would we?
No, absolutely not. You know, because let's face it. I think until the election, other than this coronavirus deal, that the economy is going to keep chucking along. Um, I think the president's going to make sure of that, just to make sure that he gets elected.
I suspect you're probably right. You mentioned the coronavirus. The update as of the morning was 75,748 cases of the coronavirus, 2,129 deaths so far. And the thing that might be rattling the markets a little bit this morning is the first couple deaths of the people that were in exile or quarantine, whatever term you want to call it, on that cruise ship. Now they're happening, so that's got to be hurting the travel sector this morning.
Yeah, it does, but they've been talking about that quarantine for a while now, and there were several people that actually were infected, and so yes, it's sad that that people are passing away because of it, but by the same token, I think it's the same as no matter where you go today, you're gonna possibly, run into the coronavirus. I mean, I think it's really spreading worldwide now, Dave, and I hate to say that, but we're seeing bits and pieces here and there that's giving us indications that it's coming. Our
It is.
shores are not going to get exempt.
Yeah, it is starting to sound like that. On a little lighter note, and keep in mind, folks, we're talking money here. We're not talking about news and sympathy. We obviously feel it, but what it does to your money is kind of the topic of conversation here. Good news and bad news and reactions. We got one company selling off a big part of their business and another one buying another business this morning. Victoria's Secret may be at least partially owned by another company today, and that's not impressing L brand shareholders one tiny little bit, is it?
No, it's not. Now we've been talking about this for a while now. Is that L Brands has been in trouble. They've had some issues. They haven't been able to take that Victoria's Secret brand and get it back up to the popularity it used to be. And so they're selling it off, or they've been trying to sell it off. They've been talking to a private equity firm called Sycamore Partners, and I think at least what I kind of thought earlier in the week is that we were going to see them come in and buy the whole stake, the whole thing. But now the way this press release is kind of worded, I'm wondering if Sycamore Partners is only going to buy a stake, a partial stake in Victoria's Secret. Obviously, once the deal's done, we'll know more. Yeah, they're not. The folks at L Brand are not liking it. The shareholder. I mean, it's trading down 11% this morning.
Yeah, they're having a bad time. Anytime a press release sounds like it's hedging bets and not really being precise, regardless of whether or not the stockholders like it, that just amplifies the loss because nobody likes uncertainty, especially if you got hard cash invested in a company.
Well, that's so true. Yeah, I mean that's the biggest thing for the stock market is uncertainty, and that's what creates the volatility.
Without a doubt. That's one sale. Let's talk about a purchase that could be a real big one. Morgan Stanley, the big investment banking firm, buying ETrade, $13 billion to buy that discount brokerage. That gives you an idea of how important they think it is.
Exactly. And so it's they were saying that this is the first major purchase of from the banking standpoint since 2008, when banks were forced to help and buy other failing banks. Now, obviously, this is not a case where ETrade's failing, but it still gives you an idea. ETrade shareholders like it. It's up 25%. Morgan Stanley shareholders, not so much. It's down about 4%.
It kind of interests me, that marriage between those two companies. It's kind of complementary. Morgan Stanley, of course, famous for being being one of the big money banks where a lot of the really, the prestige investors go. ETrade is the small guy's buyer, the discount brokerage and whatnot. Get online, sell stock, buy 10 shares of stock, whatnot, do it on the cheap. They're kind of complementary, and it kind of gives Morgan Stanley a full spectrum service ability that they might not have had before.
And you're absolutely right. It does. It could very well complement what they already do, as opposed to adding to their existing business. It actually kind of complements it, and they should still be able to take their back offices from both of those sides and cut some cost.
Absolutely. I think the CFO term for that is they expect the purchase to be accretive, right?
Yeah, exactly.
I got all those fancy terms in my vocabulary. I just don't get to use them very often. Let's see. The Philly Fed came in. Their index looks pretty good so far. More confirmation that business is at the very least relatively healthy up in the Northeast. That's good to hear. A bunch of reports coming out this morning, quarterly earnings reports. Anything good news out there?
So we do. Let's start with the travel industry, because they've obviously been having issues with the coronavirus. We got Norwegian Cruise Lines reported. They did beat by 3 cents a share, and revenue beat forecast also. Now they did come in and kind of say that it's probably very unlikely that they will, achieve their full year target that they laid out there before. They expect the impact of the coronavirus could have as much as a 75-cent per share impact on their bottom line, and so they're trading down about 0.5% this morning.
That's not bad. Beat the numbers and give a bad warning, and then turn out only 0.75% down. That ain't bad.
Nope. And then we got Avis Budget Rent-A-Car. They had a spectacular quarter. They beat by 23 cents a share. The revenue was well above estimates, and they said they had the best December ever in the U.S. And so good things there. They're trading up almost 12% this morning.
Ooh, do I recall that's one of the full-service car rental companies that were under some pressure about a year or so ago?
They have been under some pressure. Yes, they have. But they've been kind of like Hertz. They've had some good things happening, and they've been building back up. And actually, today's open, they will hit a new 52-week high, a substantial increase, probably by about $5 a share more than their previous 52-week high. So, yeah, big deal for them today.
Cool. Three more that we've got time for.
So let's talk about a big loser today, Six Flags.
Uh-oh.
Yeah, Six Flags, weaker than expected earnings. They cut their dividend by 70%. Just not good. I mean, especially compared to last year. Last year they had a profit. This year they're having a loss for this quarter. And so we look at they're down 16% this morning. It'll be a new 52-week low for them.
That ain't good. That's got to be a competitive business in the theme park line.
I would definitely think it would be. Definitely, yeah, it's got to be. So I've got, let's close with one more, Dave.
Okay.
Zillow, right? So
Ooh.
Zillow lost 26 cents a share, but that was really good because that was 9 cents less than expected. And their revenue was well above estimates also. They've been really increasing their sales on their website. So people are buying and selling homes through their website, and that's really helping them out. They're up a little over 15% this morning. They will open at a new 52-week high. Comparatively, let's see, their old 52-week high was $55. They're fixing to open at $63 a share.
Wow. I can't help but giggle anytime we get a report from a company that didn't take as big a bath as they were expected to, but I'm glad they're doing well. Resetting the table for the morning, it was an up day on Wall Street yesterday. Dow was up 170 points. NASDAQ and the Standard & Poor's both set new all-time highs intraday. Didn't close quite that high, but still healthy. NASDAQ was up by 84.5. Standard & Poor's up by a little over 22. Kind of alluded to it a couple of minutes ago, Phillip. It's not as green this morning as it was yesterday, is it?
No, it's kind of the exact opposite today, Dave. And we've seen a deterioration since you and I have been on the phone, almost double. So the Dow's down 1/3%, $91. The S&P 500 is right there with it, down $10.63. The NASDAQ's down about 0.4%, $38. So everything's looking red on that side of the equation. On the other side, everything's green, not by much, but silver is basically flat right now at $18.31 an ounce. Gold is up 0.5%, $1,619 an ounce. Crude oil is back up 75 basis points, 0.75% to, it's getting awful close to $54 a barrel now, Dave.
I wasn't very happy to see that either. 53.85 as of my last update here. Overseas markets, Asian Rim markets were mixed. The mainland China markets off. Japan was up a little bit. Europe is generally a little bit red this morning, midway through their day. Got to make note the 30-year Treasury bills are down to 1.98%. I think we call that financially hunkering down, don't we?
Yeah, and then you look at I was looking at the yields today. The 1 year Treasury bill is paying 1.6%. The 10 years paying 1.53. So
dang near that.
Yeah,
that's down near passbook savings levels, isn't it?
It is. You get anything less than 6 months is paying you more than the 10-year. And so it's going to be interesting because once that 1 year and 2 year get to that same boat, then they start talking about that inversion again.
And that might be why we're seeing an amplification of the red ink this morning. Phillip, this all sounds weird, and you and I have been talking about it. Heaven only knows when we're going to see a correction or a recession. Insulation from risk really counts when you're close to retirement. How do I find you to get that advice?
You're absolutely correct, Dave. That's why we created our financial Xray, where we can Xray your portfolio to determine how much risk is there and compare it to your risk tolerance. To get your schedule, give us a call, 863-382-0037. Catch us online at statlerfinancial.com, and then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730 a.m.
All righty, and back here tomorrow morning as well. Phillip, thank you so much. We'll catch you then, all right?
All right, man. You have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Folks, please don't forget our financial X-ray. Given where we are right now in this marketplace, nobody knows when the next correction's coming, when the next downturn and bear market's coming. I know a lot of times people think that we're doom and gloom. I'm not, but I feel like people need to be prepared for the worst, because they weren't prepared in 2008, and most people got caught by surprise. Call us. Let us do a financial X-ray of your current portfolio, 863-382-0037. Have a great day. I look forward to speaking to you again tomorrow.